Naveen Kaura says market is extremely volatile right now. So how should an investor handle the situation?
Deal with it. Markets are volatile now, and they were volatile before, and they will be volatile in future. It is like that only. So learn with it. And I think if you have these 2, 3, 4 things in nicely in place, it will help you deal with it. Which is if you have an emergency fund, which means you are not dependent on the market for anything short term. Then if you are basics are taken care of, life insurance, health insurance, and the money that you are investing is not needed for 5 years or more. And if you are a regular investor, because market volatility can be turned into an advantage for yourself. If you are a regular investor, then you normally feel happy when the market goes down because you are buying cheaper. So if you have these 3, 4 way to configure your behavior, you will feel happy. And unfortunately, markets will remain volatile, and in fact markets will become even more volatile, because we are in the last 5, 7 years, 10 years, I have seen that there is an increasing trend. Not only that the companies change more rapidly, or we are more connected, or we are in a more globalized marketplace, and you can buy anything from anywhere, and you don't know what is going to, so obsolescence, think companies become obsolete or more serviceable, or the technological changes, things like that. Many things changing, but more importantly, the markets have become even more volatile, or the integration of the market, foreign investors putting money and pulling money out. But more importantly, the impact of the media consumption, the scale of media, that is actually making us behave in a different manner. It is having an impact on our behavior. We get very disappointed very quickly, or we get very pessimistic very quickly, and we get optimistic very quickly. So that actually shows in our behavior. And that, I think, because 20 years back, when I wrote, when I was writing the edit of Mutual Fund Insight, when we got started, it was the second or third editorial of the magazine. I was talking about, the CNBC TV channel, and I was mostly, in value research, I had put an embargo on not watching TV during lunchtime, because everybody was, getting tempted to watch CNBC, because I thought that, this is just this is a distraction. A lot of people have this poor notion of being an insider by watching CNBC. It is nice for advice and general things, or for information, but I think the moment you get to see that news, in fact all the news that you see on CNBC cannot be on CNBC before it is there on the stock exchange's website. That is a law of the land. A company can reveal something meaningful first on the stock exchange, and then only it can appear anywhere else. So in that sense, I always thought so. And then I thought that CNBC is a huge distraction. When I look at it now, CNBC looks like an ancient time, hardly, the amount of social media that we're witnessing, or the amount of data available on the number of websites, the number of Telegram groups, the way, and a lot of these things are underground, they're not visible, and everybody is in his own community, and it is so overpowering. So markets will become even more volatile as a result of all this.